Hey guys, welcome back to a brand new video. I'm RexFinance, and today I'm just going to make a quick video because there's a lot of BS going on out there in the stock markets, and I just want to clear it all up for you guys. After hours today, Walmart came out and their stock is down about 9% after they warned that inflation is going to affect their earnings. Shocker, nobody knew that was going to happen, and they said inflation is requiring more markdowns to move through inventory, particularly apparel, which obviously hurts their profit because if you bring down prices to get rid of your inventory, that hurts your margins, which hurts your profit. But the thing about this is, Walmart stock is down 9% after hours, and that reaction by the stock market is complete bullcrap, in my opinion. And let me explain to you why that is. If you simply do a quick Google search and Google Walmart inventory, and then go to the news tab, you will see articles from 2 to 3 months ago, if you scroll through all these different pages, talking about Walmart's inventory glut. I even talked about this in a recent video where Walmart said reducing inventory glut will take a couple of quarters. This article was posted on Bloomberg on June 3rd. And I just want to say, I can assure you with absolute confidence that smart money was well aware of this fact, that Walmart's inventory levels were too high, Target's inventory levels are too high, Amazon's inventory levels are too high, and the only way to get rid of high inventory is to run sales, to run discounted prices, etc. Smart money, I guarantee you, knows this. So the fact that Walmart stock is down 10% after hours is complete BS, and that is completely going to try and distract you from the grand prize here. Honestly, I think Walmart stock is going to recover all of those lost gains after hours today within 2 weeks. Please, if I'm wrong, come back to this video and comment down there, but I am almost 100% confident that that is going to happen because market makers right now have been playing so many games with us retail investors. But it's no coincidence that any horrible or bad news that has come out over the past 2 weeks has not been able to hold down the stock market. The stock market wants to rally. The stock market is ready to rally. And the stock market has priced in very, very bad news. Also, I just want to say, I've been talking about this on my channel for a couple of months now, and we're finally starting to see it. Deflation is here. If you don't realize that, wake up. Deflation is here. If you need evidence of this, we've been on a 6-week losing streak for gasoline prices. Gasoline prices, the national average right now is down to $4.35, and it hit an all-time high of $5.02 just on June 14th. So basically in just a month and a half, we've gone from an all-time national average high of $5.02 per gallon of gas all the way back down to $4.35 per gallon of gas. This article I have pulled up says $4.66, but this article was posted on July 12th. Today is July 25th. The second piece of evidence we have here is the fact that for some reason the markets apparently had no idea about. The fact that Target and Walmart signaled last month in June and in May that they had piled up a glut of inventory. Weird. Walmart's down 10% after hours after they slashed their profit outlook because they had an inventory glut. Shocker. Not to mention e-commerce. E-commerce prices across the board have been falling, down 1% in June. And we also just recently had Amazon Prime Day. What's Prime Day? That's when you can buy heavily discounted items online. Deflationary pressure, prices coming back down, companies trying to get rid of their excess inventory. We also have used vehicle prices, which continue to fall down and cool off. They fell down 1.3% in June, which is around 13 or 14% in price decreases annually. And lastly, if you've traveled at all lately, I'm sure you've noticed this, but airplane tickets have been going down. In basically any public transportation, prices have also been coming down. The cost of public transportation, whether that's a bus or a train, have been coming down. All of this stuff is deflation. Deflation is here, and we're just now starting to see this take hold. And this is a very, very good thing for the stock market and the economy as long as it doesn't get away from us. Runaway deflation is far more dangerous than runaway inflation is. We absolutely do not want runaway deflation. But if we see a little bit of cooling off of prices coming back down a little bit, that is going to be very beneficial, and this is why. if prices come down and inflation starts to cool off, the Fed is going to stop raising rates. If inflation is not at a ridiculous number, they have no excuse to raise rates. And the fact of the matter is, they're very, very close to that neutral rate that they've been wanting to get to, between 2 and 3% on the federal funds rate. And if they stop raising rates, that is going to be a big bullish sign, and it will give the markets lots of bullish momentum, because when you raise rates, that makes borrowing money far more expensive for both consumers and businesses, which theoretically stifles the growth of an economy. But if those raises stop, all of a sudden things stagnate and things aren't going to get any worse. It's not going to get any harder to borrow money than it already is. And I also want to make one last note here in this section of the video in regards to interest rates. Contrary to what the media and other people have been wanting to tell you, interest rates that are sitting between 2 and 3% are still very accommodative to the economy. If we look at the all-time chart of the federal funds rate, we can see that right now we're sitting at 1.21%. If they raise another 75 basis points this week, that will be up to about 2%. And if they raise another 50 basis points, they're going to be right in between 2% and 3%, which historically is still very, very low interest rates. That is providing the economy with very cheap money, very cheap capital to invest in your business, to take out a loan and purchase a home or a vehicle. That is very accommodative to the economy, despite what you might be hearing in the media. Another thing that's complete BS that has come out today is the fact that the White House wants to change the definition of recession. I know there's a lot of debate whether they're actually changing their definition or not, but they are not sticking with the historical definition of 2 negative GDP quarters in a row. They say that, when we get this read on the 28th, I think it is. Yeah, the 28th, it's sitting on my calendar right there. When we get this next GDP read, sure, it might be negative, which would be 2 back-to-back negative GDP quarters, essentially meaning, by definition, that is a recession. But the White House is saying, with the unemployment rate being at 3.6% and a lot of these other different positive things, that right now we're technically not in a recession. People aren't feeling pain, which I disagree with. And the markets don't care. That's the big thing here. The markets really don't care. So if you think the White House coming out and saying we're not going to be in a recession is going to change anything for the stock market, I'm sorry, but you are mistaken, because negative GDP growth is all that matters to the stock market. The stock market does its best to reflect the economy, and if the economy is sluggish or slow, the stock market's ultimately going to reflect that, which it already has. But you have to remember, the stock market is always forward-looking. It does not care what is going to happen on the 28th. When we get that headline of whether or not we officially were in a recession or are in a recession, the stock market's going to be focused on, are we going to stay in this recession for another quarter, or are things going to improve and we're going to get out of this recession and back into growth? That is what is going to matter. And I want to emphasize this point even more. The S&P 500 was down 24% at its peak, and the NASDAQ was down, I think, around 32% from its peak. That absolutely is pricing in some sort of small recession at a minimum. If the stock market is down that much, it has priced in negative GDP growth. It has priced in some sort of recession. Now, the extremes of what the market has priced in is up for debate. Has the market priced in a Great Depression? Well, obviously not. But how big of a recession has the market priced in at this point? Has the market properly reflected a small recession? And to that, I say yes. With the S&P 500 being down 24%, that is a lot of value that has come out of the stock market. With the NASDAQ being down more than 30% at its bottom, that is a lot of money coming out of the stock market and value coming out of the stock market and market capitalization being shaved off of companies. The stock market doesn't just do that for no reason because it feels like doing that. The stock market shaves values to the tune of 20% or more. Even 80 to 90% of companies' value getting shaved off happens for a reason. Now, the last thing I wanted to cover in this video very quickly is the fact that this is the biggest earnings week for the stock market in the current quarter. We have Google reporting earnings, Microsoft reporting earnings, Facebook reporting earnings, Apple and Amazon reporting earnings, lots of big tech, lots of huge companies reporting earnings this week. How is this going to affect the stock market? Well, in my personal opinion, this week is going to go down as one of the most confusing weeks in history for investors. But you're in luck if you're watching RexFinance right now because you're going to understand it all, hopefully. I already mentioned at the beginning of this video how the markets really want to rally right now. They are ready to rally. No bad news, no horrible news has been able to hold the markets down. Snapchat earnings were terrible, but the next day the stock market bounced back from its lows that it opened up in the morning. And as a result of Snapchat's disappointing earnings report, Google stock was down 5% the next day. Facebook stock was down 3 to 5% the next day, etc. The markets are always trying to price things in ahead of time, which is why you saw those companies' stock prices correct themselves after Snapchat came out with their earnings and disappointed a little bit. So now, after the markets have adjusted for that disappointment from Snapchat, Google, Facebook, Apple, Amazon, those sorts of companies are going to have to come with very disappointing earnings in order to get their stock prices to fall, in order to get the stock market to fall in general. Because right now, bad earnings are priced in for Google, for Amazon, for Apple, for Facebook. And this is why people are going to be confused. The earnings are not going to be great. Some of these earnings reports are going to be very bad, but the stock prices are not going to go down as a result of that as much as you might think. Which, as a result of that, the stock market won't go down as much as you might think if these earnings reports are bad. You might even see some of these companies come out with horrible earnings reports, but their stock prices go up because the stock market decided that, they were bad, but they weren't as bad as we had priced in. It's the same exact thing that happens when things go from great for companies to good from companies. If the markets have priced in great earnings and companies come in with just good earnings, we've seen in the past, especially over the past year, stock prices can get pummeled. It's the same thing on the downside. If the markets have priced in doomsday and horrible earnings, and these companies come in with bad earnings, that's going to result in the stock market going up because as a result of what they have priced in, their results are better than that. With that, guys, I'm going to end this video here. If you are new here or returning not yet subscribed, please subscribe down below. If you like this sort of content, let me know. Also, comment down below what you think this earnings week is going to look like. Are we going to be green in the stock market or red? With that, have a great rest of your day. Stay blessed. Peace out.